Hello everyone. In this video, we will learn about the Form 941, Employer's Quarterly Federal Tax Return. This video will cover everything regarding the Form 941, taxes, deposit rules, penalties, etc. All that you need to know from CPP exam perspective. So let's begin. The IRS Form 941, Employer's Quarterly Federal Tax Return, is used by businesses to report employees' wages and payroll taxes. It includes the federal income tax, Social Security, and Medicare tax that is paid both by the employee and the employer. And the purpose of the Form 941 is to provide IRS with the report of employers' total taxable wages paid and total taxes withheld that are matched with the total deposits and wage and tax information provided to the employees on W-2 form. Now let's see which employer needs to file the Form 941. Employers or business owners who pay wages to an employee must file the IRS Form 941 every quarter. Which employer don't need to file the Form 941? There are a few employees who do not have to file the Form 941 if they are under these situations. Number one, if the employer is a seasonal employer, means they don't do the business whole year. So they don't have to file the 941 each quarter of the year. They will only file when they do the business. Employers who have filed final return means their business is closing and they don't need to file the 941 every quarter. Employers who have paid only non-payroll items like annuities, pensions, gambling winnings, they don't file the Form 941, they report these items on Form 945. The employer's yearly tax liability is less than $1,000. In that case, the employer will file the Form 944 if the employer receives a notification from the IRS to use the Form 944 instead of 941. And then he will file the Form 944 annually and pay the taxes with the form. Only paid to household domestic workers. So if the employer only has the domestic household workers, then he will report the taxes on Schedule H of his personal tax return, the Form 1040. Employers who have only agricultural workers, they will file the Form 943 instead of the Form 941. I want to mention here that when we talk about the payroll tax forms, we will be considering two different set of rules. The deposit rules and the reporting rules or the filing rules. The deposit dates may be different than the reporting or filing of the payroll tax returns. So let's discuss the deposit rules first. Under the IRS deposit rules, employers are either classified as monthly depositor or semi-weekly depositor. Employers determine their deposit status based on the aggregate amount of employment taxes paid during the look-back period. It's a 12-month period beginning July 1 of the second preceding year and ending June 30 of the prior year. So for 2021, the look-back period is July 1, 2019 through June 30th, 2020. So when we are looking for the look-back period for 2021, we will actually look at the two preceding years. The look-back period will start from the third quarter of 2019 and it will end to the second quarter of 2020. Monthly scheduled depositor. If the employer reported taxes of $50,000 or less during the look-back period, he is considered monthly scheduled depositor, and he generally must deposit the employment taxes and payments made during the given month on or before the 15th day of the following month. For example, employer must deposit taxes on the payments made in January by February 15th. A business day is any day other than Saturday, Sunday, or legal holiday. Now let's look at the semi-weekly schedule depositor. If the employer reported taxes of more than 50,000 for the look-back period, he is considered semi-weekly schedule depositor, and he generally must deposit the employment taxes based on the following two schedules. Schedule 1. If the pay date falls on Wednesday, Thursday, and or Friday, then the employer must deposit the taxes by the following Wednesday. And the second window is if the pay date falls on Saturday, Sunday, Monday, and or Tuesday, then the employer must deposit the taxes by the following Friday. Now there is a $100,000 next day deposit rule. Regardless of whether the employer is a monthly scheduled depositor or a semi-weekly depositor, if the employer accumulates taxes of $100,000 or more on any day during the deposit period, he must deposit the taxes by the next business day after he accumulates $100,000. And if this happens and the employer was on monthly schedule, then he will become semi-weekly depositor for at least the remainder of the calendar year and the following calendar year. For the new employers who do not have the look-back period, they start as monthly depositors, unless the employer has accumulated $100,000 in taxes in any pay period. Then he will become semi-weekly depositor for the rest of the year. Now the employers whose tax liability for any quarter is less than $2,500, they have the option to pay as per their deposit rule, or they can pay it with the Form 941. Now the IRS also allows safe harbor shortfall. The employers are not penalized if the amount of the shortfall is no more than $100 or 2% of the entire amount due, whichever is greater, and if the original deposit was made on timely basis, and if the shortfall is deposited by the appropriate makeup date, then they will not be penalized for that shortfall. Till now we were talking about the deposit rules and schedules to deposit. Now let's talk about the Form 941 itself. The CPP exam will not ask you to fill the form, but it is important to familiarize yourself with the form and know what taxes are reported on the form, what schedules must be submitted along with the Form 941. You will see questions on penalties and late filing or late depositing of the taxes, so let's study those aspects. In order to effectively and efficiently complete the Form 941, you will need to gather following information: number of employees who were paid during the quarter, total wages paid during the quarter, taxable Social Security and Medicare wages for the quarter, and then total amount of federal income tax, Social Security and Medicare tax withheld from employees' wages, and also employer's portion of FICA. Then you also need to know the total tax deposits you have made so far for the quarter. What information shouldn't be reported on the Form 941? Employers should not report non-payroll withholding information on the Form 941. This includes employees' backup withholding and income tax withholding for pension, annuities, and gambling wins. Use the Form 945 to report the withholding from pensions, annuities, and gambling winnings. Now we are talking about the due dates for the Form 941. As we know that the 941 is a quarterly return, so for the first quarter, which ends on March, the due date is April 30th. For second quarter, which ends on June, the due date is July 31. Third quarter ends in September and the due date is October 31. And the fourth quarter ends in December and the due date is January 31. If the due date falls on any of the federal holiday, then the next business day will be the filing deadline. And also, if the taxes have been deposited on time and in full, the deadline is extended to the 10th day of the second month following the end of the quarter. For example, for the first quarter, which is March 31, the end date, the actual date is April 30th, but it can be submitted by May 10th if you have filed all the taxes on time. Now let's talk about Schedule B that should go with Form 941 if the employer is a semi-weekly depositor and report more than 50,000 in employment taxes. And also if the businesses that accumulate more than 100,000 in liabilities during a single day in the tax year, they are also required to begin filing this schedule. Now what goes on the Schedule B? The employer will report the daily tax liability for federal income tax withheld from employees, and it also reports the employer's share of Social Security and Medicare along with employees' share. For each quarter, this withholding information has to be reported with the IRS using Schedule B, Form 941. Note that don't use Schedule B to show the federal tax deposits, use it only to report the daily liabilities. Let's talk about penalties. There are different set of rules for the penalties for failure to deposit and then failure to file the tax returns. First, we are looking at the penalties for failure to deposit the 941 taxes on time. 2% penalty of undeposited amount if it is deposited within 5 days of the due date. 5% penalty of the undeposited amount if it is deposited within 6 to 15 days of the due date. 10% penalty of the undeposited amount if it is deposited more than 15 days after the due date. And 15% of the undeposited amount if it is not paid within 10 days after the employer receives its first IRS delinquency notice or on the same day a notice and the demand for the payment is received. Then there is something called 100% penalty. Employers who are responsible for collecting, withholding, and paying the taxes, if they don't do that willfully, then they are subject to additional penalty equal to the total amount of the taxes involved. This is known as the trust fund recovery penalty. Let's look at the penalties for late filing of the IRS tax returns. So in addition to the tax due, the penalty is 5% of the amount of tax required to be shown on the return for each month or fraction of the month that the return is late, up to the maximum of 25%. And if late filing is fraudulent, then the penalty is between 15 to 75%. Failure to pay the employment taxes. In addition to the tax due amounts, penalties are 0.5% of any unpaid tax shown on the return for each month or fraction of the month that the payment is late, up to the maximum of 25%. And then additional 0.5% per month of any unpaid tax that is not shown on the return but for which the IRS has issued a notice. If the tax is not paid within 21 days of the notice and demand, 10 business days if the amount is at least 100,000, up to the maximum of 25%. And these penalties also increase 1% of the unpaid tax for each month beginning 10 days after the day the employer is notified by the IRS or on the day after the day the employer is notified by the IRS that it demands immediate payment. And that's all in this video. I'll see you soon in the next one. Until then, happy learning. Goodbye.